Welcome students to another video. Today we're going to lease a car. Now all a car lease means is that you're renting the car, you're not getting to keep it. You're basically paying back the lost value of the car. So that amount of money that gets lost divided by however many months you're leasing it for is basically what you're paying for. So let's go over the basics and how this works. So if we take a car, the MSRP, that is called the manufacturer's suggested retail price, which basically means that a company makes a car and they give it to a dealer and says, hey, we suggest you sell it for this much. It costs us this much, but we want you to sell it for this much so you can make a profit. The percent of drop or depreciation of the car, after that first year, it drops about 25%. So I'm gonna type in 25%. Well, if it loses 25%, it's only keeping 75% of its value. So I'm going to type in 75% right there. And then every year after that, it loses 15% of its previous year's value. So if it's losing 15%, it's keeping 85%. And where I get the numbers from, I'll include in the link in the description below. It has a list of the videos and websites that I've got my information from. After the first year, it's kept 75% of its value. After the second year, it keeps 85% of its previous year's value, and every year after that as well. So it keeps 85% of its value from that. So if I look at the MSRP, and let's just assume we're getting a car for $30,000. Type in $30,000 there, and the dollar sign clicks is automatic because I did this earlier. And if you want to get the dollar sign, just click on that little dollar sign where it says format as currency. And now for value after 1 year, keep 75% of its value. So I type in equals, start off every function with an equal sign. It tells the computer that you are going to do some kind of mathematical function. And I'm going to multiply that MSRP. So I'm going to tap on B2 and multiply that by the 75%, which is found here in C3. And I hit enter. So after 1 year, that car is now worth, that $30,000 car is now worth $22,500. And now for the second year equals this value right here, and multiply that by the 85%. Boom. So after 2 years, oh, I did something wrong there. Equals B2 times C3. Oh, because I have two percentages. Let's get rid of that extra percent. Boom, enter, and do the same. And there you go, 19,125. Let's do the same thing down there. Get rid of that extra percent. It's always good to check your work. For year 3, multiply that 19,125 in cell B4, and multiply that by cell C5, which means after 3 years, a $30,000 car is now worth $16,256.25. That drops a lot. For the sake of this video, we're going to say we're doing a 3-year lease. And so after 3 years, it's worth that much. The depreciation went down just about $14,000. So the residual value is what this third value is right here. So for residual value, I'll just type in equal and click on the 16,000 in cell B5. And it just tells the computer, just put the value of whatever's in there. And you can see that's already put on top, right on there. It shows you what the value is, hit enter. So our residual value is that right there. Now for a negotiated price. So it's a $30,000 car. If you feel like you're savvy, you can talk them down, but these guys are professionals. They have a whole team of people that work with them. They're trained quite well to do sales. But let's just say you're a good negotiator and say you can negotiate, I'm just gonna say 8% of whatever the price is of the car. So negotiate 8% down, which means you're gonna negotiate and you're only paying 92%. So 100% minus 8% is 92%. So I'll type in a 92%. I think it's already percent, so I'll just leave that alone. So we want to negotiate down, so we do basically the same thing that we've done before. We do equals and the price of the car, the MSRP, we'll tap on that because you're talking away down from there. Multiply that by 92%. So you're able to talk them down to $27,600. Now for the fee totals, there are lots of fees involved with getting a car. You got the title, the registration, the acquisition fee, documentation fee and tagging fees, and also it includes the security deposit, which is basically 1 month's worth of your lease. And how they figure that out in there, I don't know, but on average it's about $1,200 for all those fees that's added on, different types of fees. Some of them are state fees, but most of them are other fees. So those fee totals, about $1,200. If you want to know where I got those numbers from, again, I'll have a link in the description down below. Now the gross cost of capital, that's basically what you negotiated down to, plus all the fees, and the capital is the car. So we're just going to add negotiated price. So we'll type in equals, and the negotiated price is right up there. So you're paying $27,600 for that. Plus you're paying an extra $1,200 for all those fees. Hit enter. So right now, $28,800. Now you might have some money up front. So we'll put a down payment, and let's just say you're putting down 20% for a down payment. You could put down more or less, but I'm sure they're going to want you to do less. But let's just say you're doing 20%. 20%. And so the down payment of that is just equals the gross cost of capital times, right, tap right on there, 20%, which is you're paying up front $5,760. So now your adjusted cost of capital, because you're not going to be paying that $5,000 every month because you're giving it up front. So we take that away. So we'll do equals the 28/8, take away what you're giving them up front, and that is what you're going to be basing your monthly payments on. Now the depreciation of capital. So the depreciation, again, just basically means the loss in value of the car. So the depreciation is the adjusted cost, and we have that adjusted cost right up here, $23,040, and take away the residual value. So this is how much you're basically spending on the car. Technically it's 28, but I guess they're nice if they're using 23. So we'll do equals that 2340 and take away whatever the car will be worth after 3 years' time. So that is the depreciation of it. So basically they're losing $6,000. The dealer's losing $6,000 by you deciding to pay $28,800 for it. So the base monthly payment. So we're going to divide that number by however many months you're going to rent it or lease it for. And in this example, we're saying 3 years. So since there's 12 months in a year and we're leasing it for 3 years, 12 times 3 is 36. So we're going to divide the depreciation of the capital, that's $6,783, and divide that by the 36. Boom, hit enter. So your base monthly payment, $188.44, which doesn't sound bad, but that's just the base. We gotta have more things like a rent charge. Now different dealers will have different types of rental charges, but basically the formula I got, again in the description down below, edmunds.com basically, is the adjusted cost plus the residual value, and you multiply all that by a certain factor they give you, which is in this case 0.00125, which is like 1/8%. Where they get the 1/8%, I don't know. You'll have to ask a dealer for that, and they might not necessarily put that in the little invoice for you, so you're gonna have to ask them because you're not buying it, you're just renting it. But the formula is just equal. We'll open a parenthesis because we want to add some numbers first. We want to add our adjusted cost of capital, which is $23.40, plus the residual value, so plus, and the residual value is right up there, $16,000. Close the parenthesis and multiply all that by 0.00125 for a rent charge of about $49.12. So you're adding an extra $50 to it. Now your pre-tax total, so all these are like pre-totals, but our pre-tax total is just that $188.44, your base monthly payment, plus whatever the rent charge is, which is $237.56. Now you got to add tax. Illinois state tax is about 10.25%. So I'll put that down, 10.25%. The percent's already there, so I'll just hit enter. It doesn't show the 10.25 because I don't have decimal places showing. So to show the decimal places, you go all the way up here where these little arrows and points are. It says decrease or increase. I'm going to increase the number of decimal points to 2 because it's 0.25. And there you go. And as you can see, as a side note, it rounds it for you as well. So 10.25 gets rounded up to 3, but I want to show the whole thing. It doesn't affect the calculation, it just rounds it in the view for you, but it does the work, the actual work for you. So to figure out the tax, it's just equal to our pre-tax total multiplied by our 10.25%, hit enter, and so our tax per month that's going to be charged $24.35. So your total monthly payment is just your pre-tax total plus your tax, which is $261.91. So you're paying that much money every month for a $30,000 car, and I'm assuming it doesn't include any of the bells and whistles. I don't know if you can get a fancy schmancy car for $30,000. So now let's go figure out how much you're spending in total for that 3-year time. So for those payments, it's going to be equal to $261.91. Multiply that by 36, which we have right here. Boom. But we also need to include our down payment because we gave money up front. Can't forget that. And our upfront payment is $5,760. Hit enter. So we are spending a total of $15,188.67 for that car. And you don't get to keep the car. You just rented it, and you have the option of giving it back and then doing another 3, 4, 5, 6, 7-year lease, however you want to do that, and go through all that again. Or you could buy back that car, and you can buy it back for the residual value, which is the $16,256. Now, if you take really good care of your car, you might be able to get some money back, but I don't think it's going to make up in the thousands of dollars. The reason I gave the 3-year total payment, because I'm thinking if you can afford to give a $260 payment every month, instead of doing that, why don't you just buy like a used car, a cheap one for now, and then just save that $261 a month, plus the extra $5,760 that you'd have on that down payment. So just keep saving that money every month, and by the end of 3 years, you can go to the dealer and get that car and pay it for cash. In fact, you'd be short $1,000-ish, but I bet you if you had cash, you'd be able to get it a lot cheaper. They might give you a discount for that. Now, you can't give over $10,000 in cash because they'd have to have a background check for all that because of laws. They might think you're a drug dealer or something, I don't know. But, or you could just write a check for it. But, you know, this would be, I would say that's a better consideration. Save up your money, drive a beater for a while, and then save up for, if you have, you can get that cash real easy if you're getting paid, if you have no debt, if you don't have a lot of big payments, but it's going to require some discipline. I hope you enjoyed this video. I hope you found it informing. Like I said, all the links that I have are down below. If you like this video, please click on one of these other here. Share, like, subscribe. I hope you enjoyed this tutorial on Google Sheets and how to lease a car. And always remember to keep on mathing.